Okay, let's invite Geoffrey Dennis, independent emerging market commentator, joining us on the show now. Geoffrey, thank you very much for joining in. First, comment on this massive tech-led rally that we're seeing on Wall Street. Yesterday, it was AMD, which shot up double-digit up move. Are you getting a sense that the AI trade, is getting a bit overheated, frothy? Because there are concerns of circularity. Everyone seems to be signing a partnership. Now it's OpenAI with AMD. Before that, it was OpenAI with NVIDIA and Intel, and then you've got OpenAI and Microsoft. It's just going round and round.
Yes, I think it's a very, very good point, actually. I think there is some suggestion that things are just indeed going round and round and round. And I think that we're in a situation now where there are concerns beginning to build up about a bubble in the AI stocks and tech stocks in general. You've started to see the market really flattening off a little bit over the last 3 or 4 days or so. You've had a lot of warnings from well-known people such as Jamie Dimon about what the market is doing. So I think we may be coming to an end of this very, very strong run in technology, at least for the time being. Now, I don't expect there to be a big sell-off because I think what's different between today and, for example, the tech crash in 2000 is that these companies have got real businesses and they're generating real revenues. And there is a lot of investment going on. But I think you're right. You've hit the nail on the head there. I think there's just too much going on now in the sector. And everyone's getting too bullish on every piece of new headline. And I think we're set for a pause before too long.
Set for a pause before too long. But there's no way to kind of sort of, what should one do? I mean, if you're in the US, you own these stocks, maybe you can lighten up a little bit. But any implications for us here?
I don't think so, because, and you've heard this from me before, I mean, what is important for emerging markets generally is the performance of the dollar. Now, the dollar is a lower dollar is what pushes investors towards riskier assets overseas, such as emerging. We've had a really, really good rally this year, of course. And I think the rally can go on a little bit further. Now, the dollar's rebounded a little bit over the last few days, and I don't think it's really had that much of an impact in pulling emerging markets down. So I think the thing that could happen in the US that would really pull emerging markets down is, number one, if you got a really hefty sell-off in equities in the US, which I don't think you're going to see. I think you're just going to get a pause, some rotation, which you've already started to see into some of the, should we say, less popular sectors over the last several months. And the second thing which would really, I think, bring emerging markets under pressure would be if the US fell into recession. And that, frankly, doesn't look very likely at the moment. Although, of course, one of the challenges the market's got, and I think this is a reason why people have become a little cautious, is we don't really have much data now because of the government shutdown. And I think it's a very bad time, I think, to have a situation where we're not getting the data. But those would be the things that I think would hurt.
Jeffrey, I should have qualified. My question actually was the opposite. Will a pause, because, I mean, the US tech AI, large cap AI and technology has been this magnet for anyone who can invest across borders.
Yeah.
All money is gone in there. So if that theme starts to slow down, people start to look elsewhere. So it's actually not negative, but maybe positive for flows. We've had negative flows, FII flows for a long time.
I think that's right. And I think the key, forgive me, I think that's right. And I think the key here, as I say, is going to be the dollar. And I think if the US were to pause or pull back a little bit, as long as you don't get tremendously negative performance by the US, you would see money moving back towards, moving yet more towards the emerging markets. Now, if you look at India, which we've talked about, of course, many times in the past, I think India's got a lot going for it in terms of scope for lower interest rates. You've got probably on the back of the Israel-Gaza deal, although it's only stage one deal and we don't know if it's going to hold. That's probably going to be negative for oil prices. The economy's doing reasonably well, and of course, it's been a big underperformer. And so I think a pause in the US and a slight pullback in tech, as long as that's accompanied by a real key signal to move overseas, which would, I think, be a weaker dollar. And India could well be a major beneficiary of that.
All right. Hi, Geoffrey. Good morning and good to see you in. A quick word on the gold prices. You know, it's been moving from strength to strength. Uncertainty in various parts of the globe, as well as a weaker dollar. Well, that's boded well for gold prices. Do you think that as well is ripe for a pause? Because if we look at the gold ETF data, it's still not at those highs that we saw in tonnage terms that we saw, say, 3 years ago. So your view?
I'm skeptical about gold going much higher right now, and the reason for that is because if there is some real truth in this suggestion that we are now getting a stage 1 agreement between Gaza, therefore Hamas, and Israel, with prisoners being exchanged, that is going to be a development which leads to a little bit of a retreat from safe havens. And you're not seeing it yet in the dollar today. You are seeing a little bit in gold, which is pulling back, maybe a bit of profit taking, not obviously a big move. And of course, we have to see what happens in terms of the equity market. Now, I'm personally a little skeptical about this stage 1 deal. There's so many other things that have got to be sorted out before we can say this quote unquote war is over. But one thing that would cause some significant, I think significance too strong, some notable profit taking in gold would be in the event that you started to see one of the big conflicts around the world, in this case Gaza, Hamas against Israel, begin to settle down into some sort of peaceful conclusion. We're not there yet, but we've made a step towards that. But I personally do not see gold just powering on and on up to 5,000. I think it's well due a pause as well. And I think this situation in the Middle East could be a trigger for that.
All right. Geoffrey, we'll leave it there. Good conversation as always. Thank you very much for joining us. Appreciate it here on CNBC-TV18.
You know, it's the 44th record for gold this year. 44th. You know, I mean, it's just getting a little too precious, this precious metal.
Everything, who said everything that glitters is not gold?
Yeah.
Well, that sounds foolish now, doesn't it?